Today we're going to talk about creative real estate financing options. I'm going to give you 3 of them that you're going to like. Hi, I'm Tim Diesel. I'm a commercial real estate consultant. This channel is designed to give you tips and strategies in your investing business. If you're a broker, this will definitely help your clients in their business. All right, so let's get right into it. So the very first, let me paint a picture for you here. So if you're going to buy a property, and let's suppose it's a 10-unit apartment building, the very first thing you should do is check for owner financing with the owner. But before you do that, check with your bank or credit union. Find out what they do. Because a lot of times people want to get into owner financing, then they realize the bank doesn't allow for a second. Or maybe they'll allow 5% and their lending limits might be at 75% loan to value. So if it's a $1 million building, they'll go up to $750,000 and they'll let the seller carry back 5%. Well, that doesn't do you much good. What if you want to do a deal for 5 or 10% down? So our goal is to find the creative ways of getting a deal done. All right. Now, this is not about getting great interest rates, so that's something totally different. What I'm talking about here is financing the deal creatively, putting in a lot less money down than what's required, turn that property around because we've identified there's value there. So if you go to your local bank or credit union and ask them, hey, what is your LTV? What is your loan to value? And then what is your CLTV? If the seller carries back a second, how much can I get? Sometimes they'll say 5 or 10%, and just kind of paint the picture for them. You're doing all of this before you've made an offer. This is way before. This is preliminary stuff. You have to do the research because I'm sorry to tell you, the other major brokerages, they're not going to help you with this. Your Cushman Wakefield, Marcus Millichap, CBRE, I don't care who they are. No one's going to do this research for you. You have to do it yourself. You have to actually go to a bank or call them, whatever works, and ask them about their terms before you make an offer. So when you create an offer, when you talk to your broker representing you or yourself and you want to make an offer, you can say, hey, this is the preliminary research I have done and this is the kind of deal I'm trying to structure. Now, the bank will tell you, or your credit union, they'll say, look, we will do a 10% owner carry, but the buyer has to come in with 10% cash into the deal, or whatever their terms are. Figure out what they are, but the first method is owner financing. Add owner financing on every offer you do. Always ask for 10 or 15% right off the bat. On every offer I personally do for myself and my investors, we're always asking for 10 or 15%. They might not always accept it, but a lot of times they do. If it's smart and presented well, they definitely will take you up on your offer. That's money you don't have to bring to the table, and that can be very helpful for you. A couple tips I also want to tell you about owner financing are 2 things. When the market is on fire and everybody is overbidding and paying outrageous prices for any property class, not just multifamily, it could be retail, it could be office, whatever, it's tougher to get owners to finance the deal. Now, when the market is not moving, you have a better chance because no one's lending. So you have to remember, financing is the reason the real estate market moves. Nobody's paying all cash for this stuff most of the time. So one of the options you have is when you're doing owner financing, you don't always have to max out to 80%. A lot of times I have done owner financing of where the bank is only doing 50 or 60% LTV, which makes them feel a little safer. And then the owner will carry back a little more, maybe 30, 40%, whatever the number is. So you can get really creative with these numbers. Don't automatically try to get the owner to carry 10 or 15%. The owner will carry more. Take advantage of that. If they're open to seller financing, I always ask how much. Are you open to 30, 40% of the transaction? Because they can do 40%, the bank can do 40 or 50%. Now you only come in with 10%. That has been done. There's ways to do that. If you're having a tough time doing that, you're not talking to the right lender. Get out there and meet these lenders. If you're on maybe a LinkedIn or a Twitter or whatever social media you use, there's all these capital finance guys that probably message you or DM you all the time. You need to start asking them, hey, what do you offer? What kind of program? I'm looking for creative financing programs. What do you have? And really talk to them. If they don't have the same mindset or mentality that you want to get a little creative with the deal, they're probably not for you. They are out there. You need to find a broker, not your typical banker. You need to find a commercial mortgage broker that has access to 40 or 50 banks, and they're doing all kinds of funny deals. They're out there. You just have to talk to the right ones. Look at the deal, try to get it creative, let the owner know they're only carrying a note short term, maybe 1 year, 2 years, 3, whatever you work out with them. Give them a favorable interest rate, interest only if you have to, however you can get your foot in the door. And that would definitely be a way to do it. And if you have to, go about appraising the property, figuring out what it is, and then you can make your determination that way. All right, next one is private money. So the second way I love buying property for myself, or when I see investors trying to get together, a lot of my clients will do private money. Private money is probably my second favorite way because of the way it's structured. Most people that do private money, they're not as strict as you might think they are. So if it's an older client, maybe, and when I say older, I mean somebody in their 70s or 80s, maybe, whatever, and they're not really that interested in the mechanics of your deal, they might say, look, just give me whatever it is, 8, 9, 10% of my money every month, and I don't even want to know about it. Just make sure this money hits my mailbox, and that's all I care about. If it's somebody else who wants a little more of a business plan or something you put together, which I made a video on business plans, you should be doing that on your investment career. You have to present that to them. Sometimes they might need more of a track record. So if you do the first deal, keep track of it, figure out how it went, and show them that. Hey, listen, this is the first deal I did, you passed up on, this is kind of how it went. Or this is the deal we're looking at. Keep them involved. Even if they're not part of the deal, let them know what you're doing. It's not a secret. You want them to know how you're piecing this together because they might know people who want to invest with you. So private money is fantastic because you guys are creating the terms between you and your private money investor, right? It can be whatever the interest rate they want, and they can give you the funds however you guys decide. So it can be you wanted the first half, the second, the third, maybe 6 months after the project is closed, or however the terms you work. Hundreds of ways of doing it, it's totally up to you. So private money is my second favorite way of buying property. All right, the third way is hard money, bridge money. Now, I like this strategy for retail deals right now. Multifamily, the ship has pretty much sailed because there really isn't too many opportunities. We were doing it with multifamily properties 5 or 6 years ago. It just kind of depends on the asset class, it depends on the deal. Not to say it can't be done, but there are hard money, really there isn't too many strings. They really don't care too much about the borrower or the financials that much. They care about how much cash is in the project, what's coming to the table. They're very expensive. So if you're buying $1 million deal, you better make sure you can get it up to 1.5, 1.7. If you're just getting it up 5 or 10%, it's not even worth doing it. Bridge financing, almost the same thing. Only difference I've seen with bridge financing, it's shorter. So bridge is usually a year or so, where hard money you can go a little longer out. The fees are more or less the same. The requirements, some will play with the terms a little bit, some are a little more favorable. Just kind of depends on who you have and how you're structuring those up. So those are really for value add properties. I would not go in there and try to find something that's ready to go. If you can increase the value, hard money, a bridge lender of some sort, that's definitely a way to go. Look into that option. All right, I'm gonna give you guys a last little bonus tip. After you close on your property, and maybe you've created your LLC or whatever entity you have, and now you own your a 10-unit building or a 5,000 square foot retail center, there are ways to get business credit, right, for your property. So now after you've closed your deal, now you should start working on your business credit, not so much your personal credit, because now you can get credit lines to get your repairs done and everything set, and you accumulate more cash, more capital for your future projects, because now you have a business that cash flows and has an asset value. So look into ways of maximizing that. You should always be looking for your next deal. And after you have everything stabilized, look into those options. What I typically like to do is, if I get business cards or business lines of 10, 20, 30 grand, a lot of times I'll look to pay out whatever investors are there, the smallest ones usually. Maybe if I can figure out a way to shorten the span of a few, that's another good way to do it. So it really opens a lot of doors when you look back and see what your options are. Some investors, maybe after a year, they kind of change their mind. They say, listen, I don't want to be along for this ride anymore. Some are okay, it just kind of depends on what's there. It really depends on what's given to you. So definitely look at all the options you can to get the deal financed. There's more than one way to do it. Today's question is very simple. Have you ever bought real estate with a credit card? Anywhere. Just simple yes or no. If you ever bought real estate with a credit card, I'd like to know about it. If you don't want to share, you don't have to. Simple yes or no, but I'd like to know if you did that. Hey, thank you guys for watching. Please like this video, subscribe to this channel, ask me questions, let me know about your deals if you need help, and any other way I can help you out, just let me know, reach out to me. Glad to do it. Thank you guys so much for watching.